Hey everybody, Brian here. Today is Wednesday, June 11th, 2014. Let's look at this market. We're obviously still in a primary uptrend here. We saw a slight pullback of about a third of a percentage point in the S&P 500 today. We're still clearly above the rising 10, 20, and 50-day moving average when we look at a 30-minute time frame. We did break the trend line from this recent rally, so maybe that tells us that this market, that the rally is just going to slow down. Breaking a trend line doesn't mean it's going to reverse, but that we do need to correct it at least through some time here. So today was bullish because we held above this 94 and a quarter area, and we do still have a rising 5-day moving average. If we see a couple days of distribution, though, that would run the risk that if we were to break below 194 and a quarter after a couple days of distribution, that perhaps we see a little bit deeper pullback and we come down maybe towards that 20-day moving average. Right now, though, we're still in a primary uptrend. I would say that the light is turned yellow. It's time to be cautious. It's not time to be looking for the top in certain stocks. I mean, if you are, they should start out as day trades, and if the market allows you to hold for that is a winning position as a day trade, then I suggest if you're going to sell short for what you think might be a bigger decline, that you do so with smaller share size, because obviously we're still in a primary uptrend in all these markets. The Nasdaq held nicely above that 92.50 level that's been important for it. So really 92 and a quarter to 92.50 is our more important band of support for the Nasdaq right now. We're in a primary uptrend. We closed down 2 pennies today, so we're still again in a primary uptrend, innocent till proven guilty. We did have more declining stocks than advancers today, so keep that in mind. But as always, what you want to do, regardless of what the market is doing, is manage the risk on the individual stocks that you're in based on what those individual stocks are doing. Obviously, it's easier for stocks to go up during a primary bull market, but if you've got a good looking short sale in a stock in a downtrend, then you ought to be short even those stocks in a primary bull market, because as we know, stocks go up and down. The Russell 2000 came down and kind of tested where it had gapped up to here at about 115.35 ish, and we are still above that 5-day moving average. So we had a slight shakeout below 115.70, got back above it, and the Russell 2000 is still acting strong. I think that what we're seeing in here is a little bit of a slight pullback on diminished volume after a big volume event, and the primary trend remains higher in the Russell 2000. So I think tomorrow it will remain cautiously optimistic as long as we're above 115 and a quarter. That we should still expect to see further upside, I think, in the Russell 2000, and it's just a question of whether this market is going to correct further time-wise, or we're going to get a more important price pullback. Today we were down a half of a percentage point, but we did close above the volume-weighted average price as well. So I view it as somewhat constructive and within a constructive chart pattern. The semiconductors were up 8 pennies today. This group's still hugging this trend line here, you can see, and I think that the very first level of importance tomorrow will be 48, and below that at about 47.70. I think if we break below 48, 47.70 is likely, and I wouldn't expect a major breakdown from there. Instead, maybe just a start to a more sideways to neutral type of environment for a period of time here. The financials were hit the hardest today, down 2/3 of a percentage point, but you can see still clearly in an uptrend. I mean, we've had a real strong rally in here, and now we're letting a little bit of the steam off. We're going to need to see it back above 22.80 for us to firmly believe that the buyers are back in control once again. And as far as being bearish, I don't think it makes sense to be short for more than day trades unless we have a declining 5-day moving average, and this 5-day moving average is clearly still trending higher. So for tomorrow, I would expect maybe a little bit more consolidation slash pullback in these markets, but not anything that's going to get you rich by shorting in there. The shares of Apple were down very slightly here today, a little less than a half of a percentage point. Still in a primary uptrend. Maybe we get a pullback to this trend line in the next couple days, but we've got a rising 5-day moving average. Worst you could say is it's starting to turn a little bit more sideways in here, but Apple's still clearly in an uptrend.